Yeah, you're showing the GoToWebinar screen.
Oh, that's fine. I kind of like to sometimes if we've got 50 or more, I like to demonstrate that we got 50 or more. So,
All right.
okay, very good. Whoops, I'm doing the wrong thing here.
The broadcast is now starting. All attendees are in listen-only mode.
Well, good morning, good afternoon, if that's where you're from, or good evening, I suppose. This is Kurt Frankenberg, and I'm the founder of Radioactive Trading and author of the Blueprint, and I'm joined by my good pal Mike Chupka. Say hello, Mike.
Hello, everyone. It's good to see you here. I'm the Director of Education at Power Options. We partnered up with Kurt a couple of years ago, so I'm going to be joining you today, as I normally do, just to help Kurt out and help with the discussion. It's good to see everyone here, and I guess, Kurt, you're going to discuss parts of your radioactive trading methodology and possibly even show a live trade.
That's true. We're going to definitely show a live trade, but we're going to use the Power Options platform to locate that trade. So, okay, yeah, I just wanted to mention everybody, the room is still filling up. We've got 52 in the room right now. Just 2 more just came in, and we're happy about that. I'd like to begin with a poll here. Would like to know the following things about my audience today. If you have access to stock at a discount, for example, through your work, your employer, or some other incentive program. If you have stock that's up from where you bought it, and maybe you're not sure about what to do with it just yet. If you'd like to know how to turbocharge your income, for example, if you're taking income by way of covered calls or perhaps by way of dividends and so forth, how would you like to put a real shot in the arm and do a little better with that? If you are disappointed with the strategy of selling covered calls, let me know. Or the results of long calls. Okay. And Mike, I think we're rounding out. We've got about 5 dozen attendees so far, and I'm real excited about that. Okay, and we've got most of our attendees have already cast their votes. Maybe there's a couple of stragglers out there or people that are just signing on. So, Mike, I'd like to, with some of these folks that say that they have a stock that's up from where they bought it, I'd like to maybe see if we can get a stock symbol today. I do have at least one human being that I was working with yesterday. He's got Apple at a cost basis of $140. How do you like that?
I had one this morning that had a cost basis of $128.
Really, with Apple? Did you talk to him about the bulletproofing and the income method number 6?
No, I actually I brought Ernie in the conversation. He had actually sold a call a couple days ago too low, and
oh my goodness, yeah.
He had sold it, and we discussed about having him buy it back actually, because it wouldn't add too much to his cost base. It would have only put his cost basis up to about 132, and then use the insurance tool. But Ernie was looking at the chart, and he feels that it might break out. So he was saying, even though 6 can help you and not limit your upside, maybe you just want to wait on it after you've bulletproofed it, see what happens with Apple, and then make a decision after the move.
Yeah, that's right. That's what we advocate. Okay, Mike, we've got 58%. Can you see that up there? The results. We have 58% would like to know how to turbocharge their income from their stocks. It's marvelous. And unfortunately, we have some folks that are disappointed with the results of trading long calls. I'm going to say that probably one of the reasons for that, and gosh, one of our attendees wrote me about this yesterday, and I answered him this morning, that a lot of times long calls tend to over-leverage you. For example, when you win, boy, you sure can win big. But when you lose, you can also lose pretty big too. And as we've seen before, and as we've proven mathematically in these webinars, it's much more important to protect the downside so that you have money still yet to play for further gains, even if you accept lower gains. It is a real good thing to keep an eye on your downside rather than to simply try to over-leverage yourself. Okay? All right. Well, Mike, let's make some quick introductions, okay? I'm going to ask the folks that said that they have stock up from where they bought it, or that have access to stock at a discount, can you please send in your stock symbol? We're not going to share your information with anybody, but beyond the fact of, okay, it's this stock symbol and it's this price, okay? If you send in your stock symbol, and you'll also send in your cost basis or what your cost basis could be if you get it through your work, I've got something to share with you that I think will blow your socks off. It's pretty impressive. Okay, Mike, real quick introductions. This is me. My name is Kurt Framer. That's not me, but that's a picture that I like to use. I own a martial arts studio. I have for, oh gosh, what is it now, 24 years? For 24 years now. And along the way, I got interested in trading long stock and covered calls. And Mike, back in 1998, I got hurt really badly. Or I'm sorry, it was actually 1999. It was 1998 that I went to these cover calls trading seminars. And by 1999, I was in full swing with both trading long stock and also trading cover calls. And I ended up getting hurt really badly just by following directions. I was following directions. And, Mike, I over-leveraged myself. I did that thing where you buy long calls and over-leverage. I did that thing where you sell cover calls against margin stock. And I ended up completely cleaned out and learned that it was because of my behavior and because of some choices that I made and some strategies I was using and not seeing the flaws in those strategies. That's what got me hurt. And I decided to learn what it is that the winners are doing. And I wrote a book about it called The Blueprint. So that's a little bit of a story about me. Now, today we're going to try and convince you to get the blueprint, all right? But that's just one small part of what we're going to do. This presentation is going to be about 3% commercial and 97% meat and potatoes, including a live trade. Mike, why don't you tell me about how we met and what your role is with radioactive trading.
Okay, well, as you can see there, my name is Mike Chupka. I'm the Director of Education here at Power Options. Power Options is a patented suite of search and analysis tools for self-directed options investors, and we support over 23 different strategies, search tools, analysis tools, paper trading tools, and tracking tools as well. And about 2 years ago, one of my customers called up and wanted some help with the historical searching, where you can backtest and look at different strategies and find opportunities based on your criteria. And the customer, of course, was looking for married puts, but he was trying to find out how to use the married put historical tools to identify in-the-money put options that on the married puts that had small risk. And I said, well, that's okay. I can show you how to do that, but I don't think you're doing the right thing. You're adding so much money into this position, you're not going to make any profit unless the stock moves up 20, 30, 40%. And the customer, of course, said, really? Well, why don't you join me for my live presentation later this week, and I'll show you exactly how I make money with that setup. Of course, the customer was Kurt. I went to his one of his free webinars, just as many of you are doing right now. And I was impressed with the methodology, and I invited Ernie to join me for the next two. Ernie's the president and founder of Power Options. And Ernie was so impressed with the methodology that we decided, to partner up with Kurt and make some enhancements to our tools, the married put search functionality and the portfolio tools for tracking the married puts, to coincide with Kurt's method. So self-directed radioactive traders have a place where all of the math is done for them to identify the positions that match the radioactive trading techniques, and the portfolio tools to help them analyze the potential income methods that match the dictates that are spelled out in the blueprint a little bit. And I've been trading radioactively for about 2 years myself in my personal account. I also do some standard collars as well. And I've been very successful with it, have some great results, and as Ernie would say, had some positions where my bacon was saved because I was using insurance and I was using the put option to guard against my stock positions.
That's right. Was it Office Max that you had that big loss in, but it turned into a gain instead of a loss? Was it Office Max?
Yeah, Office Max was actually it was the first RPM I opened. I bought it at about 20. The stock proceeded over the next 5 or 6 months, I guess it was 4 or 5 months, to drop down to about $6 per share or so. and then it came back up to around $8.50, $9 per share. But when I was using the income methods, when it came back up to $8 or $9 per share, I was able to close the position for a small profit. It was only about 1.5%. And I know that doesn't sound remarkable, but keep in mind the stock was down well over 50% from where I purchased it, and I was closing it for a profit. I was long stock the whole time.
Right. You bought the stock at 20. It goes down to 6, and then comes back up to $8 or $9.
That's right.
So cost basis of $20. The stock goes to 8 or 9, and then you made a profit.
That's right.
That's pretty remarkable. I love that story. Well, I do, because I know that happened to be during the crash, wasn't it?
Yes.
Of 2008. Yeah. So, folks that were into the blueprint and into radioactive trading before the crash pretty much slept through it, and was able to take that money that they saved and then put it into the bottom of the market, and so have done very well. But we're not here to talk about what folks have done. We're here to talk about what people online today can do. And in order to make sure that we can serve everybody real well, I want to just know what kind of level of options trading we've got. Now, today I'm going to be giving away the very best parts of the system, okay? If you've got some background in spread trades, for example, or you've got some background in covered calls even, the rest of the presentation is going to make a lot of sense. Okay, so let's find out what kind of options trading folks online are doing now, and we'll get into what a radioactive trade is, and then we're going to fulfill a couple of promises, Mike. One promise that I made was that I was going to make a live trade today. Another promise that I made was, hey, there's a way for you to take income on your stock and still have unlimited upside, which is not the case with covered calls trading, is it? I mean, if you sell a plain vanilla covered call, gosh, if you just sold a covered call on Apple, you might be, having to buy that call back at a premium if you wanted to hold the stock. So that's not always the best way to go, is it?
No, you limit your upside, and you still have those large potential risks down on the downside. Eventually, and I'm sure we'll talk about this a little bit later, but we'll show how that technique over the long term really ends up being a sorting machine in your portfolio. You get the winners called away from you, they're pulled out of your account, and the losers stay with you.
That's right. Mike, let me close that poll and share the results. It looks like 3% of our respondents said options mean like you, and I understand that. There's only 2 reasons why somebody wouldn't like options. What's one reason, Mike?
Well, one reason is that they've gotten burned. They were told a story that they might make 100, 200%. You can make consistently 6% per month trading options. That's 100% a year, and you can do it without having any losses. And you got burned. And that's happened to a lot of people. It happened to Kurt. It happened to me when I first started trading as well.
That's right. And, of course, maybe the other reason is that, it just doesn't seem, easy to understand. And both are cured. Both problems are cured with education. Okay, if you don't like options, either it's because you don't understand them, or because you understood enough of a strategy to put a strategy together, but didn't really know what the risks were and got hurt. Okay, so we're going to fix those problems. Our clear winner here is spread trades. Okay, we got more folks doing spread trades than anything else, and that's marvelous because we're going to be sharing some spread trades today. And it is the spread trade, one of the spread trades that we do as an adjustment to a radioactive profit machine that leaves the upside open while at the same time capturing a little bit of premium. Okay? So Mike, let me go ahead and hide that. We're going to talk about what a radioactive trade is in the first place, and then we're going to switch screens. I'm going to get into the Marvel trade and also income strategies for buy and holders. Okay? All right, Mike, what we're looking at here, this is a trade that you followed me into, isn't it?
Yes, I did 100 shares only because that was the amount I could risk in my account, but I did follow you into this specific trade. That's right.
Okay. At the time, we picked up shares of Green Mountain Coffee Roasters at 54.20. That's what I got it for. You might have got a different price there, Mike. And at the same time, 2 September $65 put options for 16.70. Now, what kind of trade is that?
Well,
I'm looking at that. Go ahead.
Yeah, it's a married put trade, or what's sometimes referred to as a protective put position. We're long stock, and we've purchased a put option to protect our downside. But if you've ever read any basic information, some introductory to options information regarding married puts, you've probably read that you purchase shares of stock, and at the same time you purchase an out-of-the-money put option, a put option that's below the current stock price, and only 1 month out in time, or maybe 45 days out in time. So you have a really low cost on the put. You might be protected 10, 15, 12%, more like 15, 20% if the stock drops, because the stock has to drop through that strike price before the insurance policy kicks in. But what you've done here, Kurt, is reversed those two basic concepts. You're actually in the money. You bought a put that's above the current stock price, and you purchased a put that's about 5 months out in time from April 22nd. Excuse me.
That's right. And there's a very specific reason for that, okay, and I'll go ahead and explain here in just a moment. But Mike, looking at the added cost here of buying the stock and the put is an insurance policy, and not a lot of us are really excited about buying insurance, but it's necessary in this world. We buy insurance for our car, for our life, for our health, for a number of different things, and the same instrument is available to us in the stock market, and we don't take advantage of it. I'm not sure why. I've heard with covered calls trading, I've heard it compared to owning a house, and then when you sell your calls, that's like renting it out every month for income.
Yeah.
Well, that makes sense, except for I've never, ever met a real estate investor, and I've met a few, but I've never met a real estate investor that would consider owning a property that wasn't insured or couldn't be insured. Okay, so anyway, here we are with an insurance policy. Now the total invested is $70.90, and when I told you 3 years ago what I was looking for, you said, geez, you can't make any money that way.
Yeah.
Well, Mike, if the stock goes to $72.10, okay, you're looking at my cost basis here of $70.90. If the stock goes to $72.10, how much money will I make?
Well, just looking at the cost basis, you're not going to make anything more. You're just going to make $1.20, Kurt. Now, that's not a big profit for a significant move. With your cost basis of $70.90, stocks at $72.10, we'd make $1.20. Okay,
now that's what a lot of folks believe, but that's not the case. Okay, let's go ahead and take a look at what did happen. 8 days later, I was in a live seminar, and the stock had an earnings announcement. Okay, Green Mountain Coffee Roasters came out with smashing earnings, and the stock went up 18 points on the day. I sold my shares. I didn't do any income methods. Right here where it says RPM, that's radioactive profit machine, okay, which is just my trademarked expression for having a deep in the money 5 or 6 month out in time put option protecting your stock, okay? And it's a platform from which to launch other trades, spread trades, that we're going to get into, but this day all I did was sell the stock, okay? I sold the stock at $72.10. I also sold the put options at $9.70, not zero. You know, when you own a put that's far out in time, the decline of its price is a lot slower than you might imagine. And what happened then here, Mike, is I was able to get a total of $81.80 for closing the whole position. Now remember, on the previous page, my cost had been $70.90, so that's a profit per share of $10.90. Now, that's good, but that's not what I want folks to focus on. I want them to look at this, okay? Whoops. I want them to look at this. The fact that no matter what, I could not have lost more than $5.90 in this transaction. Even if that earnings announcement had disappointed investors and the stock plummeted by 40% overnight, or there was some kind of flash crash, or jets hit the Twin Towers, okay, it doesn't matter what could have happened to that stock. Mike, the most I could have possibly lost is $5.90, and probably not even that much, Okay,
Mm-hmm.
so this is single-digit risk, and yet a double-digit return in just a few days. Okay, that's what I think is really important for folks to look at. Not so much the return, but keeping the risk low. Okay.
Mm-hmm.
Alrighty. Well, Mike, I am ready to switch screens and go ahead and show what can be done with one of these radioactive profit machines after we put it together. Okay.
Mm-hmm.
Before doing that, let me run another poll here, and the poll would be real simple question. Looking back over the last 12 months, are you happy with your trading results? Real simple. Looking back over the last 12 months, are you happy with your trading results? Okay, and now I'm into the Marvel example. And we're going to go ahead and share that. Okay, Mike, we've got most of our voters have participated already. I'm going to give it another few seconds here and throw up those results. It looks about the way it normally does, doesn't it?
Yeah, this is common. We'd like to see it a little bit better, but this is what we normally see during these presentations, isn't it?
Right. I'll go ahead and close and share the results. What Mike and I are talking about is the fact that we usually see a single digit or maximum of about 20% saying yes. It's usually single digit or teens. Today it's 11%. 11% are happy with their trading from the last 12 months. Well, I'm going to say that means the other 89% are unhappy.
Mm-hmm.
We've got 44% saying no, just clearly saying no, and another 44% saying mixed emotions. Now, Mike, what's mixed emotions code for?
Well, it's really code for no, isn't it, Kurt? If we were happy with our trading results, we would have said so. Mixed emotion means sort of, yeah, we've seen that there are potentials for gains in the market. We've seen and where we've had some profitable positions, but we haven't really been overly successful yet. We've given some of that back. We've had some winners and then had some big losers, flash crash, for example. So we're just not really happy with our trading results.
Right. And please understand, I'm not poking fun, okay? Nobody had mixed emotions more than me when I had success month after month for a while, and then saw all my profits evaporate. In fact, all of my capital evaporate. Right. The reason my emotions were mixed is because I knew that it's possible. I know it's doable to take money out of the market. But then again, these losses, man, they were just killing me. Okay? So, Mike, I'm going to congratulate all three categories. I'm going to congratulate the yeses for beating the market. Good for you. But that percent is very small. I'd like to see that higher. I'd like to congratulate the no's for recognizing there's a problem and coming and doing something about it. And I'm going to congratulate the mixed emotions folks because you're probably in the exact space that I was when I first started to trade radioactively. Okay, you just need to get control of one particular aspect of your trading, and after that it should be smooth sailing. Okay, Mike, let's go ahead and hide those results, and we're going to show a riskless bear call spread. Do you think that our spread traders would be happy to see that?
Oh, absolutely.
Yeah. Let's go ahead and take a look here, and okay, hopefully you're seeing my screen. Do you?
I have the marvelous, the MVL, radioactive, and now we say I would say that I hate to brag.
Yeah. Okay. Very good. Just so y'all know, this is I'm not licensed to use the Marvel universe of characters to endorse radioactive trading, but I did a trade on Marvel, and I'm showing my devotion as a fan. Okay. So I grew up with these guys. When we put together the Marvel RPM, first of all, I had a different trade in which I made some money. I made about 4%. Opened Marvel with 200 shares. I ended up adding another 50 shares, and then it got called out and sold. And anyway, I had 100 shares left over, and according to the shares that I had bought, Mike, I had got in and got out at a profitable price. But I was thinking to myself, well, what do I do with this other 100 shares? Now, here's why I asked that poll earlier. I said, does anybody have this situation where you have stock that's up from where you bought it? Okay. Well, I had a situation like this, okay, with the Marvel RPM. my cost basis on those 100 shares. Now, it's not an adjusted cost basis because of selling calls or anything like that. I just had a cost basis where I bought in at $31.71. Okay? And at the time, the stock was trading at $35.98. Well, Mike, I could sell immediately for a $4.27 profit, right?
Yes, $4.27.
Okay, but here I was in kind of a quandary. I knew that I had a method, the radioactive trading method. I had a way to bulletproof myself to lock in some gains, but then also play that stock for some further gains. So rather than just selling the stock and being out of it, I decided to go ahead and bulletproof it. Okay, so here's what we did. I converted it to a married put trade, and I know that you were watching while I did this too. I had the stock at $31.71, remember? And this is what we call the 5-line setup of a radioactive profit machine. First, you have the shares of stock, all right? Secondly, you have the cost of the put option. Third, that's your total investment, okay? Now, when we take into consideration the strike price, well, Mike, I've got an investment of $38.21, but a guaranteed price that I can get out of this of $40. Does that make sense? So
yeah.
What's my at-risk amount?
Well, you have a negative at-risk amount, which means you're guaranteed at any time over the course of the next several months, you can sell to close, you can exercise your put, I should say, and sell to close your shares of stock at 40, and you'll get a $1.79 profit. But you still have an unlimited upside profit potential because we haven't sold a call against it or done anything to cap the potential gains. So we have no break-even point, guaranteed profit, several months of protection in place, and unlimited upside profit potential.
That's right. Here's how, using the Power Options tools, here's how this position looks, okay? We have the familiar hockey stick graph of married put position. Now, I'll point out that this is upside down from the graph of a covered calls trade, isn't it? Covered calls trade, you have risk, but you have a capped upside. Well, this is different. It has a capped loss, right? Instead of a ceiling, it's got a floor, but an unlimited profit potential. But there's something missing from the graph. What's missing?
Well, there's no break-even line. You're always positive wherever this graph goes.
All right. Now, a lot of folks will look at that and say, well, Kurt, you had 427 gain, and you traded it for a 179 gain. I'll have to say, no, that's not exactly what happened. When I bought that put option, okay, the moment later, right a moment later afterwards, I could still sell that put option for about what I got it for. Okay? So it's not like when you drive a used car off or a new car off of the lot and it immediately loses 20% of value. No. If I decide to unwind this trade, I could have done it and still got my 427 profit or something very close to it. But what I have done here is I've swapped an uncertain return. Have you ever held a stock, Mike, that was up and then saw it go back down?
Oh, yeah. Dry Ships was my best stock gainer. It was the stock I've made the most money in. It was also the stock I've lost the most money in because I didn't get out in time, and I kept thinking, oh, it's going to go up, and it just kept coming back down from my secondary purchase point. Biggest gain and biggest loss.
Right. Biggest gain, that it was not a realized gain, right?
No, I did actually realize the gain that I bought the stock at 17. It had that, all the shippers had that big move up. I think I sold it around 60. I only had a couple hundred shares. It was great profit. But then the stock kept going up. Every day it seemed it was hitting a new 52-week high. So I bought back in at about 150.
Got it again. Oh, boy.
It went up to 130, and then it came back down to 60.
Oh my goodness. Okay. Well, I think a lot of folks on the line could relate. You feel like, geez, am I going to feel like a chump for selling too early? But then again, am I going to feel like a chump if I hold on, and then I give back my profits? Well, here we got no problem like that. Okay, Mike, I've got a definite return. Okay, but I've also got infinite, almost unlimited upside potential. Okay,
that's right.
So. Now, that's okay, that's fine, but why don't we also talk about the income methods, how I could take some income on this particular stock. There's 9 different ways to take money out of a married put position without necessarily selling the stock.
Mm-hmm.
And if your stock pays a dividend, which Marvel didn't, okay? Marvel
Right.
wasn't paying a dividend. But if your stock does pay a dividend, then there's a 10th way, okay? But here we're going to share income method number 6. Now, this is one of the 10 income methods that we use at Radioactive Trading to either lower risk, take income, or both.
Mm.
Here's what I did, Mike. I sold the August $40 calls for $1.78. At the same time, I bought the August $45 calls for 28 cents. Now, that I guess up there it says net credit, right? So yes. I can't ask you, is that a credit or a debit? Okay, it's a credit. It's a credit. What do we call that particular position right there?
Well, that's commonly referred to as a bear call credit spread. We've sold one call at a lower strike price, bought another call, and we receive a credit for this transaction. But when we do this by itself, we want the stock to stay below $40 per share. Both calls will then expire worthless, and we'll keep the entire net credit. The risk, of course, is if the stock moves up in price, if we just have this position on.
Okay. Now, I want everybody to pay real close attention here because this is exciting. All right, this particular income method in this particular context is really exciting because here's the risk-reward graph of a bear call spread. Okay, if I've sold the 40s and I've bought the 45s, then I get this nice little credit on the front end, but it could really go against me, couldn't it, Mike?
Absolutely.
Yeah. If the stock ends up at 45 or higher, then I'm going to be obligated to deliver that stock at 40, and yet at the same time, I can buy it at 45. So what could happen here, Mike, is that I could end up paying back $5, though I have received $1.50 on the front end. So that's kind of a big risk, isn't it?
That's right. Yeah, I mean 3-to-1 risk almost there. It's hard to have a winning trading account when you do that consistently, isn't it?
That's right. Okay, but here's the deal. Okay, my cost basis is $38.21, right?
Mm-hmm.
If I'm obligated to sell at 40, so what? So what? See, here's the deal. All right, I've got this underlying trade. I've got the stock and the put, and I'm guaranteed not to lose any money. Okay.
Right.
I've got a guaranteed exit of $40 if the stock crashes. Now, if the stock crashes and I've sold the bear call spread, that's good because I get to keep my whole premium, right?
Right.
But if the stock doesn't crash, maybe I'm going to have to pay back. Well, here's the deal. Take a look at this nice flat line down here. Now, doctors and I don't like flat lines. We like to see little bumpies, okay?
Right.
But here's the deal, okay? That's overlaying the bear call spread on top of the married put. Now we've got 4 different positions, okay? I own stock, I own a put option, and I've sold a call, and I've bought a call. And look at what just happened. Now I still have an infinite possible return, right? And
unlimited upside gain, yeah.
Yeah, and if you'll notice, my maximum risk has gone even further to the negative. I have negative risk. I'm definitely guaranteed a gain of 8.9% now. Okay, isn't that something? Okay. Now, would you like to know the rest of the story?
Of course, I'd love to hear it.
Okay, I think a lot of folks would too. Okay, so this is June 22nd. Last year, I opened this particular RPM by buying a January $40 put option. Okay, and this was on some shares of stock that I had that were up a little bit. Okay, now on July 23rd, I sold a bear call spread and took in the $1.50 credit that I was just describing, but I had no risk at all. Okay, now here's what happens on August 6th. Marvel takes a bump down, and I'm able to close the short $40 call for 45 cents. Now, Mike, do I have any obligation to sell at all anymore?
No, you don't have any obligation on the upside, Kurt. No obligations left.
That's right. And what I'm sitting on is I'm sitting on long stock, a put option that's protecting that stock, and a long call that I've essentially I own it for free. That's kind of cool. And what I'm banking on is that the stock will go up, okay? Now,
Right.
if it did, I'd be long stock, and I'd also be long that $45 call. Now, I have to report that the stock did go up, but it didn't go up in time for my long call to, for me to be able to double dip, okay?
Right.
At
Okay.
last, it was not to be, okay? But what did happen was, first of all, I did put myself in position to have zero risk and double dip on the upside, okay?
Mm-hmm.
And sometimes I've been able to do that. For example, with Netflix, a little while ago, Netflix went up about 8.9%, but my trade went up 12.6% because I
Right.
was long on the stock and also long on the call. Okay, kind of cool.
Mm-hmm.
A lot of folks say that, geez, when you buy a married put, you're limiting your profit. Oh, really? I actually made more money on that than just plain stock. Anyway, here's what happened at the end of this whole exchange here, Mike. On August 31st, Marvel, Disney announced its intention to buy Marvel for $50 a share. And we had a jump up, and I decided to go ahead and close Marvel right
Mm-hmm.
then. Okay, now remember my cost basis had been 38.21, and I closed it for 48.41. Okay, during the 2 months that I was playing the stock for further gain, there was no risk.
Right.
All right, the stock had been up just a little bit, and then I used a unique configuration of the married put plus income method number 6. Got $105 for income method 6. I got 30 cents when I liquidated that put, and $1,000.20 capital growth. Okay, so for 2 months, that was a 30.2% return on an investment of 38.21. Okay, so again, the really exciting part about this all was that that was bulletproof during the process. Pretty cool.
Mm-hmm.
All right. Now, not everybody has the luxury of having a stock that's up from where they bought in. But Mike, did we have some folks write in with their symbols?
No, no one did, Kurt.
No one did? Okay. Let's go ahead and give you that chance here that if you would like to see if something similar can be done for you that we did for Marvel, go ahead and write in with your stock symbol and your cost basis. Okay. And while that's going on, let me launch another poll, okay? What single thing do you think you need to be more successful with your stock trading? What single thing? If this smorgasbord was set before you and you could only pick one of the things on this list, what would you pick? Mike, how are we doing on time?
That's 12:40, Kurt.
Okay, we're gonna want to switch over and do some tools and pick a stock and do a trade, huh? Let me see here. Okay. We've got a pretty revealing result here, Mike. Let me go ahead and close the poll and share the results. It's been up for almost a minute now. Okay, and share. Mike, what's the clear winner here?
Well, the clear winner, of course, is limit my losses more.
Limit my losses more. Yeah, that makes sense. Okay, and the second place winner was more reliable system for timing my trades. Well, let me ask, why would you want that? Why would you want to have better timing with your trades? Could it be to lose less often?
Mm-hmm.
Or lose less when you do? I think so. Okay, limiting your losses is really the key to trading, and we've demonstrated this before. We're not going to have time to demonstrate it today, but I've shown where you could actually have more modest gains and do better, just so long as you keep your losses low. Okay. All right, Mike. Let's go ahead and hide those results, and I think I'm going to want to change over to you, so that we can locate a trade, and I'm going to go ahead and do it. Now, here's something that I want to make sure is clear, everyone. I'm not going to make a specific stock pick recommendation here, although we are going to pick a stock and we are going to play it.
Mm-hmm.
I'm not advocating that you necessarily buy this stock. What I am going to say is that any stock that I play, I'm going to play it this way. This isn't a recommendation, it's a demonstration. I'm going to show you how to keep your loss limited in any one particular position to a very small amount. And yet, if it goes your direction, you're going to make some money. Okay? And you can track this with me. Okay, Mike, what are we looking at here?
Well, we're in the Power Options tools, and as you can see, Power Options is a tab navigation system. When you want to access the tools to a given strategy, you simply click on that tab, and that'll pull up the main view for you. We're going to be in the Married Put tab right now, and what we're going to do is go ahead and open up the search tool. And as Kurt mentioned, when I open up the search screen, we're going to be able to see the different positions that match that basic criteria that's listed down below. And as you scroll down, you see here that I have selected in the search screen to view the radioactive default search. These are the basic starting points that Kurt uses to identify his radioactive profit machines. You can simply select that from the drop-down menu. And as we see up at the top here, here are our results. I have a couple of positions on Express Scripts, Ross Stores, DirecTV, which you opened yesterday, Kurt, I believe.
Yep.
And various positions, AutoZone, O'Reilly Automotive, for example, Cracker Barrel. Dollar Tree, for example, and a couple of others. And that's what the system did, is it went out and looked across the entire universe of options and identified only those positions that match that default criteria set. Of course, you can make adjustments to that based on your personal risk-reward threshold and what you're looking for.
Very good. Let's, oh gosh, let's take a look at the chart of one of these. How about Panera Bread, for example?
Okay. And to do the further research and analysis, once we've identified the positions, we just use the More Information buttons over on the left. And we'll go ahead and link to big charts here, which you can customize if you wanted to look at specific sort of fundamentals or technicals. You could customize the chart there.
Very nice. Let's see. Maybe I'm going to want to do that. Can we go back and take a look at Panera's, you know, the risk and the reward and all that good stuff?
Let's look at the specifics here that I have selected. I have added some extra columns on my screen as well. I have the percent dividend yield, which isn't relevant really in this point. But, excuse me, Kurt, we're showing Panera Bread at 84.07. We could purchase the January 100 put option for about $18.90. So the total cost into the position would be $102.97. But since we've purchased the 100 strike put, we're only risking $297 or 2.9%, and we're just about 19% in the money. Now, if you look closely, Kurt, we have another selection down here. We have the November 95 strike put option with Panera at 85.04. So it's a little shorter time frame, lower strike price for $14.20, and the risk here is about 3.3% or $3.27 of the entire investment.
What if I was comfortable with a little bit higher risk, like say 6% or so?
Well, let's take a look at what Panera has to offer. I'll start in January, so from that More Information button again, I'm just going to link over to what's called the Search by Symbol tool. If you have a stock and you want to identify the married put possibilities, you can just link to this tool. Here's your January selections, Kurt, and you see we have highlighted our 100 strike. That's the position that we linked over from. The 95 strike put on Panera has a 4.4% at risk, or $4.37, and the January 90 put for 12/10, $96.17 total net debit, and a risk of 6.4%.
Okay. All right, I might be into that.
All right, well, let's take a look at it graphically.
90s. Can you tell me the, you know what, yeah, go ahead. Let's look at it graphically.
Yeah, we just want to take a look at the profit and loss chart. Of course, everyone online will see what this looks like. Here we have our at-risk amount, roughly about $616. That's if and only if, you know, you can see that from the chart. That maximum risk really only occurs if we hold the position all the way to expiration and make no adjustments.
Right.
Red line here
shows
shows
some adjustments, aren't we?
Yeah, the red line here shows us the halfway point, and you can see the break-even on October 6th. Halfway between now and January expiration, the break-even point is right around about $90, isn't it?
Right. What about that Cracker Barrel?
You want to take a look at Cracker Barrel? Okay. Let me close our profit and loss chart for Panera and close our search by symbol tool. And Cracker Barrel here, Old Country Stores 5056. This is showing us the December 60 put for a total cost of $11.50. Our total net debit would be $62.06 with a risk of about 3.3%. And then, of course, we can take a look at that stock chart again real quick. And this is for CBRL. This is for Cracker Barrel, just using the Big Charts link.
Okay.
And close that back down. And if we wanted to look at other positions again, use that More Information button. We'll go to the Search by Symbol tool. And we see here you could use the December 55 with Cracker Barrel at 50.58 at about 790. Ooh, both have kind of low open interest and low volume there. But the total net debit would be 58.48, assuming we got in at the natural ask. So our risk would be 3.48 or 6% if we wanted to go less in the money with this position.
That's the December 55.
On Cracker Barrel, that is correct. 6% at risk. Rough ask price is 790. Does have some open interest, but it hasn't had any volume today.
Okay. Tell me the symbol again. I'm in a different screen right now. The symbol
there are no
for Cracker
symbols.
Barrel?
Oh,
For Cracker Barrel.
CBRL, Charlie Baker, Radio Larry.
Got it. Okay. And it's December 55s that we're looking at there.
That's correct, sir.
Okay. Now, ladies and gents, the reason that we're going through this, okay, is that before I risk some real dollars here, which I'm getting ready to do, I want to make sure that that I understand the position. Now, Mike, why don't we talk about the at-risk amount? Okay. First of all, there's a percent, right?
Mm-hmm.
And then there's also a dollar amount.
Yeah, the monetary at-risk amount. And for the
Right.
December 55, since our total cost basis, the total net debit would be 58.48, we do have the 55 put. So our monetary at risk is $3.48.
Right. Okay. Now, $3.48 actually equals $350, doesn't it?
Roughly, yeah. If we did 100 shares, that would be a risk of $350 for every 100 shares of stock. Okay?
Right.
Contract.
Right. Okay. So if I was trading a $100,000 account, roughly, and I wanted to keep my percent risk to the portfolio down to 1%, I'd only want to risk $1,000, right?
Mm-hmm.
And how would I do that? How many shares would I pick up, and how many?
Well, you could do only 200 shares, so that would put your at-risk amount at $700 total. If you wanted to increase it a little bit, you could go over the 1,000. You could do 300 shares of Cracker Barrel and 3 put contracts, and that would put your risk a little bit over $1,000. It would be about $1,050.
Okay. All right, very good. I've decided that I want to pick up Cracker Barrel.
Okay.
And I think I'm going to cancel. I began to place an order for Panera Bread, and I'm not getting filled on the puts.
Okay.
So I'm going to go ahead and cancel that order. Yeah, I wanted to see if I could get the puts at a lower price.
Mm-hmm.
And I'm going to modify something here and get into Cracker Barrel.
All right, I'm just going to pull up the profit and loss chart. Right now the stock's at about, 50.59, and the natural ask price of the put is about $7.90.
Okay. I think I'm going to do better than the $7.90.
Okay.
In fact, I'm sure of it. What did you say the price on Cracker Barrel is?
$50.59 is what I'm showing right now.
It's just a little bit higher than that right now.
Okay, let me refresh. How about 50.63?
Okay. You drive a hard bargain. Uh-huh. Okay, gang. Thanks, everyone, for tuning in. And I am ready, I think, to show. Yep, there it is. I'm ready to show.
Why don't you go ahead and grab that screen from me there?
Okay. Okay, gang, this is what we promised, and what I've done, again, I'm just going to reiterate, I am not showing this as a recommendation of Cracker Barrel, for example. Do we see the screen up there, Mike?
Yes, we have your account now up at Options Express.
Okay, very good. I'm not showing this as a recommendation to buy or sell any kind of security. I'm just showing you how I would trade any kind of security. It says I saved $30 on this trade. It's because I got in the spread. My fill was $7.80. Hopefully you can see that there.
Got it.
$70.80 for the put, and the stock cost me $50.64. Did 3 contracts and 300 shares. So my contracts of the December $55 puts are covering my shares of Cracker Barrel, and so my risk is down to about 6% or less. Pretty cool, huh? Okay.
That's right.
Now, Mike, I'm going to run another poll, okay, because we had a number of people, we only had 11% say that they were happy with their trading from last year, okay? So I'm going to repose the question, what if you could keep your wins from last year, and yet your losses were down to 6% or less per trade, per trade that went against you? Would you have changed your answer? Would you have said, yes, I'm happy with my trading? Would you have still said no but been closer to yes? Or would you have still said no? I'm not happy even if I'm keeping my losses down below 6% and keeping my wins. And this is going to be a pretty revealing poll, I can tell there, Mike. We've already got some pretty astounding results, and they're still rolling in. So I'll leave that poll up for just a few moments. What was it again? Only 11% said yes, they're happy with their trading results?
It was 11%, and then we have an even split of 44 and 44 saying no or mixed emotions.
Okay, that totals 99%, but I think that's just because of rounding, in the poll. Okay. Mike, that poll's been up for a minute, so let me go ahead and close the poll and share the results. Is 65% better than 11?
That's more than 5 times more, isn't it, Kurt?
Yeah, it's almost 6 times as many. Folks would have said yes, I'm happy with my trading results, and some folks would still say no, but been closer to yes. Okay, and the 11% that said no, that said yes before, I'm happy with my trade, now the 11% would still say no. So how about that? All right, let me go ahead and hide those results, and I'm just going to follow that question for the folks that said that they would have done better. Okay. Let's put a dollar amount to that. Mike, I was doing a seminar here, a live seminar not too long ago, and in that live seminar, I had one fellow raise his hand and he says, try $30,000. And I said, geez, you would have saved $30,000 last year in your trading if you'd have known this? You know what he said? He said, no. I would have saved $30,000 in one trade. Last year if I had known this. So, okay. Mike, I'm going to go ahead and close the poll because we got a lot of results in already. Not everybody got a chance to vote, but many did. Nobody didn't get the point, Nobody said, I can't see how this would help. 6% would have saved at least 300. 18% would be ahead by 1,000 or better. And the lion's share here, 65% would have saved or made $5,000 or more. Well, Mike, we've given that information away for free, haven't we?
Yes, we have. Yeah.
Yeah. Okay. Did anybody write in with their symbols?
We had a couple. I think we had one gentleman write in who's already in a protective put position, bought shares of GIS at I think $37.50 and a 45 put at 8. And that pays a dividend, but the stock's only at about $37.60 right now. Someone has Citigroup C for $360. The stock's up a little bit. It's about $380 or $390. So far, the one I had was HAS. I believe it's Hasbro with a cost basis of about $35.71.
And what's Hasbro at now?
No, sorry, I didn't actually got out of that screen because I was doing the other screen. So hold on one second.
I think that's HAS, right?
HAS, that's right. And it's
Yes.
at 42.92, so it's up 20% from the original purchase price.
Mike, I'm going to give you a few moments to plug that in to your.
Got it.
Oh, you've already got it. You're that on the
I've got
ball.
it.
What a guy! I don't care what they say about you, Mike. You're pretty smart. Okay. So let me change the presenter
Hold
over
on.
to you.
I'll just grab it from you. Let me grab it for you
You
real
grab
quick.
it? Okay.
Mhm.
All right. And ladies and gents, we're fulfilling promises today, but we want to go a little bit further. Okay. The promise that I said was I was going to trade live. I also said I was going to show you a way to have income and also still have an unlimited upside. Now we're gonna well, I've shown that already with Marvel, but we're going to show that again right now with this gentleman's stock. Now, please understand, we're not advocating, look, go out and do this right now. But you know what? It'd be a good idea for you to learn. It'd be a really good idea for you to learn what's available. Okay, so the cost basis is $35.71, right?
Yeah, I should do something real quick. I just want to mention what we're in is called the insurance tool. It's a specific tool for married puts and collars on the power option screen. So we're in the insurance tool. We simply typed in our stock symbol, HAS, our cost basis of $35.71. And right now we're just going to look at puts. And I left it all months because off the top of my head I don't know the expiration series, but I see we have some Octobers and we have some Januaries in here as well.
Okay.
And there's the current, I should say, unrealized profit of 20.2% or $7.21.
Okay.
Too far. There we go. Good. Now what we're shown is available put options that we could purchase now. And we have some ones for July, which are only 30 days out in time. Depending on your SIGA model for this position, which is discussed in the blueprint, you probably want to go out to at least October, and you might even want to consider going out to January here, going further out in time on this position to give more time for the stock to continue to move, where you can do other income methods and lock in more profit potentially.
Yeah. Mike, just for grins and giggles, would you do this for me?
Yeah, absolutely.
Let's look at the October 4250 put.
Okay, October 4250. It's down here towards the bottom of the screen. We could purchase that for $3 right now. Now we do have an unrealized 20% gain, but for 121 days, this would change the cost basis to $38.71. But we're guaranteed to get $42.50 back. So we have a locked-in profit of about 10%, about half of what we have, 9.8%, but that's guaranteed for 4 months.
Right.
Now, it's good to see the numbers, but what do we always like to do? Let's take a look at this graphically and then see if there's other things which we could do to this position. So I'll just link directly to the profit and loss chart. For our Hasbro position, which was originally purchased at $35.71, here's a 42.5 puts just at the money here for October at $3. And we have an infinite upside profit potential and a guaranteed return for the next 4 months of 9.8% no matter what the stock does.
Right. So this would be like making a deposit in your bank and having a 9.8% guaranteed return, right?
Mm-hmm. That's
Because
right.
we could just hold it. Okay, but then let's add to this a bear call spread where we sell a near-term bear call spread. For example, maybe a 42.50 call in July, or maybe even a $45 call.
Okay, so this with the 45 call natural bid and ask price. The natural bid is 45 cents for the 45 call, and we could do the 50 for 10 cents or the 47.5 for 25 cents. About a 35-cent net credit or a 20-cent net credit, depending on which selection that you do. Now, for your 42 and go ahead.
Yeah, I was going to say that one's not too exciting.
Yeah, and we could do the 42.5 call at 150. And then the 45 calls at 65 cents, so that would give us about 85 cents net credit. If you use the 5-point spread using the 25, sorry, hold on. Excuse me, the 47.5 call for a 25-cent natural ask, you'd have a net credit of $1.25.
Okay, I may have chosen a put that was too close for the insurance. But just for argument's sake, okay, let's do the 42.50 / $45 bear call spread and just look at what that does to the stock.
Okay. So from our options screen, I simply click on the call, and that's going to add that call into my next available block here. And I'm going to add the 45 call as well. Just click on that link, and it's added into our view. I'm going to, of course, select to sell the 42.5 call and buy the 45 call. I'm not going to put in any prices. Just grab the natural bid and the natural ask. Let's go ahead and hit submit. We already had a bulletproof position that had no negative value, never went negative. And then here we see when we add this, we do have a little blip here, but it's still a guaranteed profit, even if the stock's at 45, of about $627.
Right.
And an unlimited upside profit potential.
Okay, so if Hasbro goes down in the near term or stays flat, we're going to collect a premium, and we're guaranteed, even if something goes horribly wrong, we're guaranteed 12.2% now.
That's right.
But still have an unlimited upside if Hasbro decides to go up. What's missing on this graph is a break-even line. We can't lose anything. Okay?
That's exactly right.
Yeah, so I wouldn't necessarily do it at the strikes that I've shared here today. I'd probably analyze this just a little bit further, but we are showing right here a good way to take a little bit of income right now, turbocharge your income, and still have the possibility, after July, this may expire worthless, and we may be able to sell the October bear call spread as well. We may be able to roll our puts out to the next month and continue to be bulletproof and take. Does Hasbro pay a dividend?
That is a good question. I do not know off the top of my head. Let me find out real quick.
We can be bulletproof.
Research tool.
Yep, we can be bulletproof. We can take income with our bear call spread, and if there's a dividend, why then we also get that on top.
Ooh, 2.3%.
Happy day. Okay, so add that to the 12.2% guaranteed return, and now we've got something that's kind of special. So, Mike, it's 2 minutes after the hour, and I said that we'd finish at 5 minutes after. So we've got just time enough for 2 polls. Okay, now I'm going to ask what 2 things impress you the most about today's webinar. Is it beginning with single-digit risk but unlimited upside when you're buying into a stock? We didn't actually demonstrate this principle, but it's true that you can be wrong more often than right and still make money. Just think of this example. If you make dimes but you lose nickels, well, you could flip a coin all day and maybe even lose just a little bit more often than you win, but still you'll make money. Okay? Do you like the idea of bulletproofing? You can start out with a position that has risk and then reduce your cost basis by way of 1 or more of the 10 income methods to go to no risk. How about that idea of taking the stock, bulletproofing it, and still taking income? Or better yet, what we just shared with the Hasbro position, for example, and this was just numbers taken from one of our audience members, taking income and still having an unlimited upside, not like if you just sold a covered call. Right? All right, let's give that poll just a few more moments, and I'll do a final poll, and that poll will be, what do you want to know next, and what can we do to help? Okay. Mike, I'm showing taking the stock, bulletproofing, and still being able to take income, and close second, taking income and still having an unlimited upside. So marvelous, very cool. Okay, Mike, I'm going to do the final poll, and then we're going to close up on time. What would you like to know more about next? Since you've got the screen, Mike, can you pull up radioactivetrading.com?
Yes, sir. I've got that all handled.
Okay. Now, we didn't actually demonstrate the trade simulator tool today, but we can show you how to get that. How do you like that Power Options Search and Destroy platform? We used that just now to come up with Cracker Barrel as a candidate, and I went ahead, and I'm confident enough that it's going to do well, that I just invested about $16,000 in it. Do you like? Would you like to know more about the blueprint, which teach you how to do not just income method 6, but all 10 income methods?
That's right, and the proper setup and what you look for when you get into those positions, what kind of charts you like to see personally, Kurt, and how they can use the tool to evaluate their own searches and their own analysis.
That's right. Okay, Mike, I'm going to go ahead and close the poll and share the results. And first, second, and third place. First place, Power Option Search and Destroy platform. That's what I call it. So what we demonstrated today to find Cracker Barrel, we'll go ahead and give that away. The Power Options Before and After tool. That's what you were demonstrating just now with the Hasbro deal. And then, of course, third place is the blueprint. All right.
Okay.
Mike, let me go ahead and give that.
I have the screen. You should be viewing it right now. Oh, yeah, hide the poll, and there we go. Oh, this is radioactivetrading.com. That's where we're at right now. And for more information about those of you that were interested in the blueprint, if you go to the products menu, you can see the available prices there for the blueprint and a further description. We also have some CDs, video CDs, I should say, archived for you. So if you wanted to get started, just little baby steps at first, you start off with the Foundations of Radioactive Trading CD. It's about $89. And, of course, the Fission subscription as well, where you can follow over Kurt's shoulder. And if you buy the blueprint today, you're going to receive an offer to get your first month of Fission for only $10.
Very good.
Okay, and then if you go to the Resources tab, here's where you can get that free copy of the Trade Simulator tool. And you can get a free 14-day free trial to Power Options. Just click the link here for the free 2-week trial to Power Options. If you're not already on a trial or a subscriber of our services, just go to radioactivetrading.com, go to Resources, and you can get a 14-day free trial right there. And I also want to remind everyone, we are recording this presentation, but if you wanted to watch a full presentation on using the Power Options tools for radioactive trading, just go into the free webinars and podcasts. There's a listing here for that whole hour-and-a-half long session on using the Power Options tools for trading radioactively. And some of my favorite ones, Kurt, the Mathematical Edge of Radioactive Trading from February 16th. I don't know if you remember that one, but that's one of my favorites that you did, comparing it to the Mary put techniques to long calls and other strategies that don't work the same way. There's
right.
other archives here for you.
One of our attendees today, Bill, would probably like that video. I just sent an email to him explaining the mathematical edge, but it's possible that that video would be good for him and for his clients.
Absolutely. Absolutely.
Yeah.
I saw your email. I was going to respond to him and point him in this direction, but I think this was the webinar he was referring to that he had watched.
Very good. All righty. Hey, Mike, I think we need to sew it up, okay? We're a few minutes over, and I want to respect everybody's time. But, gentlemen, ladies, if you'll go to radioactivetrading.com, you can pick up all those free resources on the Resources tab. And, of course, the blueprint is always for sale at $289. And I'm going to remind everyone of what they answered me, okay? Would you have saved at least $300 on your worst trade last year? 6% said yes, and then everybody else said that they would have done even better. So I think the $300 is worth it for that purchase.
And Kurt,
okay,
I want
Mike,
to remind you,
go ahead.
I just want to remind you real quick, if you could, go ahead and put in a few little sentences there and enter your trade that you just placed for your Fission subscribers, and I'll make sure that that gets sent out. And I also want to, did you get my email today about your lunch meeting?
Haven't seen it.
Okay. Okay, well, I sent you an email. You want to make sure you check that out about your lunch meeting today.
Okay, very good. Sounds good. All right, gang, this is Kurt Frankenberg and Mike Chepka signing off. We'll see you out there, and I'm going to wish everybody happy trading.
And take care, everyone.
Bye for now.